Should I incorporate my small business? Believe it or not, this is the #1 question I get as a CPA. It's a difficult decision, but it's also a strategic step that could lead to substantial tax benefits. So let's explore why taking a leap into incorporation might just be the smartest business move you make. Hi, I'm Fabio Campanella, co-founder of the Campanella Group. We specialize in integrated tax, investment, and estate planning for high-income earning Canadians and small business owners. Today, I'll be sharing insights on the potential benefits and considerations of incorporating your small business. We hope our perspective adds value to your financial journey. If so, please support us by subscribing, liking this video, and sharing your thoughts in the comments below. So, maybe you've decided to start a small business, or maybe you've been at it for a while. It's natural to question whether adopting a corporate structure is a savvy move for your venture. While it's true that corporations are often synonymous with large-scale operations, this doesn't mean that smaller businesses can't reap similar benefits. But before we dive into these perks, let's take a moment to revisit the 3 prominent business structures available in Canada and set the stage for why incorporation might just be the game changer for your business. Structure 1, sole proprietorship. Sole proprietorships are the most straightforward and cost-effective business structure in Canada. You might take steps like registering a trade name, launching a website, or obtaining an HST number, but at the core, the business is an extension of you. Starting up is typically hassle-free, with minimal legal or accounting fees involved. You announce your business to the world, and you're good to go. But this simplicity carries its own set of challenges, most notably legal liability. In a sole proprietorship, your personal responsibility for business debts and legal actions is direct and unlimited. Say your business faces legal action due to negligence. Your personal assets are just as vulnerable as your business assets. What about collaboration? In a sole proprietorship, that's a tough road. This model is inherently a solo act, prohibiting you from offering business equity to potential partners. Then there's the matter of taxes. Under a sole proprietorship, your business earnings are your earnings, taxed directly at your marginal tax rate through your personal tax return. This could mean facing a tax burden of over 54% depending on your province. Good luck growing your business at that rate. Structure 2, partnerships. Moving on from sole proprietorships, let's consider partnerships. Essentially, a partnership is a collaborative business between 2 or more individuals who combine resources and talents to pursue profits. Some partnerships can be very complex, but at its heart, a partnership is about collaboration, multiple parties uniting with a shared vision. Like sole proprietorships, partnerships benefit from ease of formation and cost efficiencies. Their primary advantage lies in the combination of resources, embodying the proverbial wisdom that 2 heads are better than 1. However, the drawbacks of sole proprietorships persist in partnerships, particularly concerning limitation of liability and taxation. Liability within a partnership can be joint and several, which means that each partner may be equally liable for the action of the other. Therefore, if one partner incurs a liability and lacks the assets to cover it, the other partners could be held fully responsible. Taxation presents another challenge. Partnerships in Canada are not taxed as separate entities. Instead, profits are distributed and taxed through the individual partner's tax returns, potentially subjecting them to tax rates exceeding 54% on their share of the profits. Despite the potential for pooling capital and expertise, partnerships offer limited advantages over sole proprietorships and carry significant risk without the protections afforded by other business structures. Structure 3, corporations. Enter the corporation, which in my opinion is the single best structure for most small business owners in Canada. A corporation is a separate legal entity. It can enter into contracts and own property in its own name, separately and distinctly from its owners. Corporations are formed by at least 1 person under federal or provincial legislation and involve 3 parties. Party 1, shareholders, the people that own and fund the corporation. Number 2, directors, the people that oversee the corporation, and number 3, officers, the people responsible for the day-to-day management of the corporation. In a very small organization, it is possible that 1 person can fit all 3 roles. Corporations offer 3 major benefits over sole proprietorships and partnerships. First, limitation of legal liability. Second, transferability and financing advantages. And third, tax advantages. Limitation of legal liability. A corporation stands as an independent legal entity, which crucially limits the personal liability of its shareholders and directors. In adverse situations, the risk to the owners is generally confined to the corporation's asset and their initial investment, thereby keeping the business owner's personal assets safe. Ease of transfer and financing of business. The distinct separation between ownership, directorship, and daily operations that a corporate structure provides, coupled with limited liability, often makes it more straightforward straightforward to secure equity financing. After all, investors are more inclined to contribute capital if they're not personally on the hook for the company's legal issues and debts. Furthermore, corporate shares are straightforward to issue and transfer, and the perpetual existence of a corporation, unlike individuals, ensures continuity. This flexibility simplifies the process of transferring ownership and expanding the business, making corporations an attractive option for growth and securing operational financing. Okay, but what if you're not interested in rapid expansion, or you're not worried about legal liability? That's okay, we've still got tax advantages. Remember, in Canada, corporations are considered separate legal entities for tax purposes. This means that corporations file their own tax returns independently from their shareholders, directors, and officers. In fact, corporate tax in Canada is very conducive to small businesses that want to save for the future. You see, unlike sole proprietorships or partnerships, which are taxed at their owner's marginal personal tax rates, corporations are taxed at a flat rate. For example, a small business corporation in Ontario will attract a flat tax rate of 12.2% tax on the first $500,000 of annual profits as of 2023. Compare that to a top personal tax rate of over 53%, and you can clearly see the advantage of a corporation. In addition, when selling your business, you have the potential to access the lifetime capital gains exemption. The lifetime capital gains exemption allows all Canadians to sell the shares of a qualified small business corporation tax-free up to a certain limit. In 2023, that limit is just over $971,000. In contrast, at the highest marginal tax rate in Ontario, that sort of capital gain would result in almost $260,000 of tax. Big difference. So what are the downsides? Well, for starters, corporations are a lot more complex than sole proprietorships and partnerships. They require expert legal, tax, and accounting knowledge to operate correctly. Their startup costs are higher, and their annual legal and tax compliance obligations are more complex and costly. But if you're profitable, looking to expand, or you think you may be able to sell your business down the road, then a corporation is likely for you. So, to sum it up, incorporating your business can provide tax advantages and legal protections that shouldn't be overlooked. If you're considering incorporation, let's talk. Visit our website or check out the link below to schedule a free initial consultation with us. Let us help you make the most informed decision for your business's future.